Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, we're going to talk about Canadian MJ, WEED, ACB, APH, CRON, EMH, TLRY, the new IPO, and TGOD for some IPO comparisons. So there's been a lot of pain for the bulls recently. There's things that we can learn from this pain. If you're sitting there and just watching your account go down day after day after day, use that as motivation. Number one, if you have long-term holdings and you're not looking to be a short-term trader, that's great. But there are strategies that you can research on your own and look to incorporate those strategies to make your portfolio better responding to this action. And what I mean by that is hedging. So hedging is obviously when you don't go all in one direction. So if I have a long position of $100,000 in WEED, if I open a $5,000, that's 5% of my total position. If I open puts on those $5,000 for however long period of time, I am hedging against my bets, and as my $100,000 portfolio goes down, my $5,000 puts bet is going to go up, and because of the power of options and how they can magnify wins and losses with bigger percentages, it ends up being some pretty solid gains. And if I went bearish as soon as the daily higher low pattern was broken and I entered those puts probably at this point are up a significant amount. It obviously depends on when the expiration is, but the bottom line is there are ways that you can educate yourself to be better prepared for these kinds of swings. So you don't have to watch your entire market value fluctuate, 20, 30% in just a month. So that's something that I would suggest doing, and shorting is another way to do it. But again, you don't have to, sell all of your long-term holdings and liquidate in order to protect yourself a little bit better. So I'll go over my trading style and what I've been doing this week. I've been playing for the bounces. We got to a point where it was too oversold for me to be comfortable with any kind of shorts for more than just a quick scalp, and really missed the opportunity for a short after that Kramer pump. And we, of course, expect to sell the news reaction to Kramer in the sense that it was the second time it happened, and we saw the gap up open and the run up leading into that segment. But in order to, you never could anticipate that we're going to dump that significantly after that episode. But it's the kind of scenario where you position yourself in a trade and it allows you to see significant profit more than you may have anticipated if you allow that trade to run a little bit. So I missed that one. Cryptocurrency has picked up in terms of the action going on there, so a little bit distracted over there as well. And it's a pretty interesting correlation where the daily uptrend was lost on Canadian MJ and the bulls finally changed the trend on crypto for the first time in months. So definitely seeing some little inverse action there. It's not the first time we've seen that, in the sense that I do believe traders like me are bouncing from these sectors back and forth. And like I said in a previous video, people are transferring money out of their stock accounts back to their crypto accounts, and that is likely having an effect on these high speculation plays as well. High risk, high reward is going to attract a certain kind of trader that is going to be in both of these markets. So where we stand with WEED, we are absolutely looking for a bounce. I'm saying Monday, but I am going to be cautious, and we have to remain cautious. And I've been playing for bounces at least 3 days this past week, but I've remained very protective, and I actually profited. I had a pretty solid week trading WEED bullish. And you look at this daily chart and say, how can that be possible? Well, there's plenty of short-term bounces mixed in there. And my strategy heading into every morning is the more aggressive the bears are to start the morning with a flush down, the more aggressive I'm going to be buying. So that has resulted in some solid bounces a couple times, but it's also resulted in some small losses. And those losses are kept small because I'm remaining protective, knowing I'm fighting against the daily trend. Why is this downside bearish pressure so significant? There's a lot of institutions selling. And we have some great members in the chat room. Shout out to Big Deuce and Mr. F and Frank and everybody that's contributing, because they are highlighting what these institutions are doing every day. And the ones that are liquidating their positions, we're seeing Anonymous as one of these institutions that is seeing significant, and it doesn't even necessarily have to be an institution, but significant selling, to the tune of tens of millions of dollars, and is creating this downward pressure. So on these flushes, I am market buying into this weakness. If I see the 5-minute RSI under 20, the 15-minute under 20, the hourly under 20, and the 4-hour oversold under 30, that makes me confident to be buying into weakness, knowing that I'll get at least a short-term bounce. So this day was Wednesday, I believe, July 18th. I entered 200% of a larger position than I normally would that I take for a day trade. And the reason I did that was because of how aggressive the bears were to the downside. So I did 3 market buy orders into this weakness and then sold on the way up and then kept a bit in case the bounce gets follow through and then end up stopping out that second half of the position break even. So that was a solid move. The next day I tried it again. And at that point I lost 15 cents. So the first day I made well over $1 of gains. The next day I lose 15 cents. And the next day here on Friday, I did the exact same thing. I bought into weakness first thing. Again, this is only because I'm very experienced and very comfortable playing oversold bounces. To just say buying into weakness, obviously there's much more to it than that. But it's this pattern. We see the pattern, and so I capitalize on that pattern. So the same thing. I did market buy orders on Friday morning. We saw a very significant bounce first thing. I sold half of it for profit. Already had a day maker if I sold it all up there for a really nice day. I only sold half because I want to hold on and give myself the opportunity for once the real bounce gets going. And we haven't seen the real bounce yet, obviously. So I then set the second half of my position at break even, and I end up stopping out. And now I'm back to all cash as I wait for another opportunity. And why I feel this opportunity is now coming probably on Monday is because we're getting to this point where the scales tip. So you have scales of supply and demand of who wants shares and who is selling shares. And we get to a point where everybody that's going to be looking to sell shares in the short term is selling out, and everybody that's going to be looking to buy is going to suddenly outweigh the people that are looking to sell. And that's when we get the oversold bounce, and the scale very quickly flips because shorts have to cover, there's no more selling pressure, and there's only buying pressure. So the pressure is bulls buying and shorts covering, and it leads to a fast bounce. So there's some things that I'm looking out for that started to stand out to me at the end of Friday. And I saw accumulation Friday. Look at the last 2 hours of trading. Look at the price range. Very contained price, especially for what we've seen all week. So in this 2-hour time span, we saw a price range of 31.87 to 32.12. That's a 25-cent price range for 2 hours, and the amount of dollar volume that has been coming in here is very significant. And I didn't do the math before I made this video, but I remember saying well before the close that it was already $15 million here. So I'm going to go ahead and assume it's $20+ million traded in the last 2 hours of the day, and it was contained. So this to me showed me accumulation, and it showed me likely shorts covering. You have to think about fundamental or psychologically putting yourself in the shoes of these big boys, these big institutions. If I'm looking to have 200,000 shares of WEED, which is a significant position, 10,000 shares is 300, so we're talking $6 million if I want 200,000 shares. And let's say I'm short. I went short a few days ago. So I need to cover my short. The last thing these institutions want to do is see a day like this. Let's scroll back to the last bounce we had where we had that 10% bounce. This is a very similar scenario, and we're going to compare the differences. But it was a very significant bounce. You do not want to be an institution that either has to A, cover 100,000 shares, or B, wants to load 100, 200, 300,000 shares on this kind of day, because this is when the volume is picking up and it gets significantly volatile in the sense that we don't have a significant amount of shares on the ask for these purchases. So that's a scenario that we would call a short squeeze when the big boys are forced to buy back. So they don't want to be forced to buy back. So what they're going to do is buy back near the bottom, but not at the bottom. So in my opinion, there are shorts covering here and there are longs going bullish. And I do expect a potential flush down first thing Monday, and I'm going to look for that bounce. And we're going to get the real bounce very soon. The 4-hour RSI at this point is the lowest we've seen in a very long time. 23 RSI on the 4-hour. And if you want to find the last time that we were down at these levels, it's all the way back when the price was down under $10. So years. We're talking over a year since we've seen the RSI this low. So let's look historically what happened the last time we dumped. All-time high, absolute all-out dump. We had that one little push down with the lower open, 10% bounce followed through. So at this point, that measured move is very similar to what we're seeing here. So we know there's going to be a bounce. Is it going to be a short-term bounce? In my opinion, yes. I am going to be looking to make bearish entries once the bulls tire on this bounce, which might be a few days out. but I'm going to be looking to play the bounce first. I'm going to be looking to go very aggressive and capitalize. I already, at the end of the day, started to initiate some positions in other accounts, either, my IRA account, or I have a couple other smaller accounts, just so Monday I don't have to be bouncing around to all these accounts and get overwhelmed. So at the end of the day, when I saw that accumulation, I did enter some positions, and these are the size of positions that I don't need to monitor, tick for tick. If we do drop one more red day and it takes another red day before we get the bounce, I'll be fine just patiently waiting, because I know I'm very comfortable with an end of the day buy here, that it'll be green at some point early this coming week. So the daily time frame, RSI is almost oversold here as well. If we get a push down first thing Monday, this RSI is going to pretty much be at about 31 or 30 before we look for a turnaround. There's also a gap to be watching. At this point, I think the gap's a little too far to be a target. It's 30.55, and here we are at 31.81. So we're talking another 4.5% dump to fill that gap. CGC has the same gap here, but it's less than 2% to fill it. So a little bit of a difference there. And I'm also noting that CGC dollar volume is catching up to WEED dollar volume a little bit every week or so. So I'm keeping an eye on that in case we see the volume switch in terms of like Cron did, where the US has way more dollar volume in Cron than the Canadian side of things. So there's tons to be watching. I could make this video 12 hours long, but I will try and speed it up a little bit here. So I'm looking for the push down first thing. Why will I be confident buying first thing Monday morning, ideally into some weakness, is because of where we stand on all these RSI levels. Like I said, I am very confident that if I buy here under 32, that we're going to be over 32 Monday, if not Monday, Tuesday. If not Tuesday, I'd be shocked, but then Wednesday. So very confident that eventually the price is going to get back to these levels very quickly and see some profit. So the 4-hour RSI is crushed. The hourly RSI at this point is down at 18. So if we get a flush first thing Monday morning, that RSI is going to be down at about 15 or so. And again, extremely oversold conditions. We have to see follow through, and we have to remain protective. I'm going to do my same game plan. I'm going to enter into weakness. I'm going to sell a little profit into strength on the initial bounce, and then I'm going to set a stop loss potentially at break even to see worst case scenario, I'll make profit. And a lot of people don't understand that fact of protecting their trades. They make, the entry and then they just leave it. And that's when they get into trouble if the bounce doesn't end up playing out. So we'll look at EMH as an example of that here in just a moment. But flush first thing, high volume bounce is on watch. And then after, like I said, after a few days, if we bounce and the bulls head up towards 35, 36 and start to slow down, I'm going to be looking to make a bearish entry, anticipating a daily lower high is going to form, but I definitely want to wait at least a few days for this bounce to play out. So targets on the bounce, 5% is a conservative bounce target from the low. 15% is a little bit of a reach in terms of a very bullish bounce. So perhaps somewhere in the middle of that range. And again, I'm not going to try and predict the top. I'm going to sell into strength, knowing I'm not going to nail the top and being completely fine with that. And then just protect that other position just in case. The one scenario where we could see further downside is if these institutions are not done selling yet. And the way that the action went on Friday, it seemed like they were, flushing everything out and getting rid of everything. But that might not be the case. So we have to be cautious of that. That there could be, it could take another day. So we always have to keep that mindset. This might not be the real bounce. We could just see a weak follow through and another leg down. And as long as we are anticipating that scenario, we're going to remain protective. This is very similar. If you are a crypto trader or former crypto trader, this is very similar to the shift that happened in what I call the market cycle 3 of the crypto space. Crypto was all raging bull to all-time highs. Then we had very aggressive shorting and buying of the dip. The bulls were very aggressively buying of the dip. So we had beautiful 4-hour oversold bounces to make profit on. And then everything changed. And rather than seeing aggressive buying of the dip, we saw bear flags, which just led to weak bounce attempts, lower highs, and then continuation down. And that is pretty noticeable in terms of the comparison to what we're seeing now in the Canadian MJ market. We're not seeing aggressive buying of the dip. We don't have any short-term catalysts in terms of, the vote has now passed. We're waiting for October as the next very clear date that everybody's looking towards. I do believe people are going to be looking to reload in September heading into October. I do expect the bulls to show back up. The question is, how much downside do we see until then? And the big boys are going to do everything that they can to flush out as many people as they can, get the price as low as possible, make money shorting it in this lull, the summer lull, and then look to reload to be looking for that fall move up, in my opinion. So the weekly time frame for WEED at this point, ideally the bulls would have held, well, really, this is a support level of 33.76. The most important support level for me is 23.88, and that is the most very clear pullback that we established a new base of support at and a new very clear higher low. That 33.76 level was one to be watching, but that's just really because there wasn't really anything else nearby because we ran so hard. So note the increasing bear volume definitely stands out, and I'm going to be looking for a weekly higher low to form in the near future to be looking for a bounce, but because of the range from the high to wherever the low of this pullback is, I would expect an equilibrium on the weekly with a bounce and a lower high and then a tightening weekly range as we head into the end of the summer. So oversold bounce, be very protective if you're looking to play it. And if you want to, add to your long-term holdings and let it ride, that's fine. But I'm personally, the fact that I've been protecting every bounce attempt gives me cash to play it the next day. So like I said, I lost 15 cents one day on a trade, and then the next day I make more than $1. So my profit by allowing myself to have that cash was 500+% more than what I'd lost the day before because I kept that loss really small. So that's the bottom line. WEED and CGC are going to be my play. The entire sector is likely to bounce together. There are going to be some names that likely have more profit, have a bigger bounce than WEED. I choose WEED for the liquidity and the volume, but there are names that are going to bounce weaker and there are names that are going to bounce stronger. And that's a little bit of, luck in terms of choosing which ones it's going to be. So you could also spread out, choose two names if you want to play this short-term bounce. So ACB has been absolutely dumping. And what I believe is going on here is, again, shout out to members. We have some great knowledgeable members and suggesting that we're seeing arbitrage going on. And Google arbitrage, if you don't know what that means, but it's where we're going to see market makers or institutions or whoever sell ACB and short ACB and buy MedLeaf because these shares, when they combine for the companies, right now there's a premium on the price of ACB in the sense that, if you're buying MedLeaf, and I haven't updated the numbers after Friday, but as of Thursday, if you're buying MedLeaf, the shares in ACB that you're going to be getting, there's a profit to be had there. So I do believe that we're seeing extra downward pressure on ACB. There's also been speculation by members that the ETFs, because the ETFs are going to be merging these two companies, all of a sudden the one company is going to have a very significant percentage of their holdings. So I believe it might be around 8% is what we saw on the MJ ETF. And if those get combined, that's too heavy. So we're likely going to see these ETFs lighten up a little bit and sell some of their shares to not be so top heavy in this one company now that they have merged. So I do believe that that is adding to this downward pressure. We now have 12 red days in a row. We know an oversold bounce is coming. Probably going to see a really solid oversold bounce. But again, they could be inhibited. The bounce could be inhibited depending on how much of that selling is going on and whether we do see that continued shorting of ACB going long in MedLeaf until they do reach that equilibrium of where their prices are set for this merger. So extreme weakness. The daily RSI is already down at 27. The 4-hour RSI is down at single digits. We're down at 10, and actually turn off extended hours, it's a little bit higher. So we're down at 17. The hourly RSI down right around 20. So definitely looking for an ACB solid bounce, and it's because of how beat up we are. There is the potential that the percentage gain from the bottom of ACB could be more than WEED. Again, that's a bit of a gamble. I did try to play the ACB bounce, and I stopped out on this inside bar bear break down at 787. And I did end up taking a small loss there. But again, the loss is small. I'm not left holding any bags. And I then shifted my focus on CGC, and that one bounce on Wednesday, again, multiple hundreds of percent more profit compared to the loss that I took on ACB. So it's just managing positions, keeping the losses really small, knowing that we haven't hit the bottom yet when we see these clear signs of continuation down, and exiting positions for small losses to keep that cash available to be able to potentially reload 5-10% cheaper. Who knows? So we are looking for the bounce here. I do believe that the ACB bounce will start when the WEED bounce does. I'm noticing that we're seeing a significant need for the sector leader to be the leader of this bounce in the sense of, okay, we're seeing increasing bull volume, we're seeing follow through. Now the sector bulls are going to gain confidence. We're going to see shorts cover across the sector. That's what this sector needs, WEED to lead the way. And again, we have to see the follow through. So let's just go an example real quick on WEED again. On Friday, we had no follow through. Let's look at the 5-minute time frame. So again, we had the very strong bounce. After this bounce, you absolutely, in a normal condition, would see a higher low form on the 5-minute time frame. Either a higher low and continuation if the bounce is for real. And again, we have to see continuation with 5-minute higher low and higher high, a 15-minute higher low and higher high. that's when we know that the bounce is starting to be for real on WEED on Monday or Tuesday when it does get going. But here, the more we pulled back, the more it was very clear that there's still a lot of downward pressure. Every little bounce saw bears pressure selling into it. And look at this 2-minute time frame. We had lower highs and lower lows on the 2-minute time frame the entire morning for 3-4 hours. And look at the resistance zones. We could easily see that market makers and sellers were keeping the prices contained under certain resistance levels intentionally. We rejected so many times 33.30, 33.29, 28, 27, so 4 rejections all at the same level. But we just see consistent lower highs and lower lows. Every time there's a bounce, the selling pressure picks up. So we're looking for that to flip. So ACB definitely on bounce watch. Let's go over the first resistance levels at this point. Hourly lower highs have to break these lower high patterns. And I'm looking at resistance of 32.59 and 34.15 on WEED. ACB resistance is 7.45, and look at the lack of any resistance all the way up until $8. So that's why the bulls can get some nice follow through once this scale does finally shift, but we're not there just yet. We're looking for it Monday. APH had a really solid bounce mixed in there, so it's not as beat up due to that one strong bounce day, but we have lost the key daily support. So I was highlighting in the past couple weeks that Reddit did not like the potential to lose this higher low pattern. And as soon as we lost 1145, that is red flag number 1. And on that one day, we took out all 3 of these support levels. That is very clearly losing the daily uptrend. And I was highlighting the lack of support in this zone once those support levels were broken. So we formed another lower high on the daily of 1137. And here we are coming back down to test the low. If the bulls can hold 1022 and get this bounce going on Monday, we'll look for the potential of an equilibrium if we form a lower high compared to that 1132. There's the potential for a tightening range here, but we have very clear daily lower highs to be watching now in order for the bulls to try and change the trend. And it's the same case on WEED as well. We lost the daily higher lows. We had the high, low, top of the bounce, higher low, lower high, bear break right here, but it was saved by Kramer and CNBC, and then there's the follow through. So the clear bear break occurred, and that little fundamental news delayed the dump for a day or two, but obviously following through now. And of course, ACB lost its daily higher low pattern long ago. The break of 875 was a big red flag. It's been nothing but an all-out dump since then. APH hourly resistance, if the bounce is going to get going, first level is 1054 and then up to 1087. So I'm going to be using the hourly time frame significantly early this coming week, along with every other time frame, of course. Weekly time frames, long-term trends. This video is getting too long, but APH is not entirely comfortable where we stand right now. We're heading down towards our lows of consolidation. I said recently that a new all-time high this year is not likely, and obviously after this past week, it's even a lot less likely at this point. So have to change trends back for the bulls, and that's not going to happen anytime soon. At this point, we're just looking for an oversold bounce for the daily time frames to set another lower high. Cron on the daily chart held up better than most before we started to fall back here, but clear bearish day on Friday, and now we're looking back down at our low of 815. So the weekly time frame for Cron had been holding up still higher lows. That's why 815 is so important. If we lose 815, we lose the weekly higher low pattern, and that will be very notable. You can see a nice little uptrend here, a clear lower high downtrend, and that would be a clear bear break. And honestly, that could lead to a few more weeks of downside on Cron. Obviously, the bounce of the sector is going to have an impact, but now that I'm looking at this chart right now, I might be considering a swing trade short position on Cron if we do lose this weekly higher low pattern. Hourly bounce attempt for Cron, we're going to be looking at the high of 873 and then looking up at 905 as the next resistance level. So EMH is also in free fall, a little bit more of a bounce attempt here holding up, and that's just because we were so crushed before things got brutal in the sector for the rest of the bigger names. So the RSI was already down at 20 on the daily, so we saw a nice little bounce. I believe the last video I did for Canadian MJ was right here before this bounce day on Monday. So I did enter that bounce with some market orders first thing in the morning. Got a pretty solid average on EMHTF, but again, it's the same strategy that I just highlighted where I sold half of it for profit that morning. We saw a very quick 10 to 15% move, I think. And so I sold half of it into that strength, and then I put a stop loss at break even or just below break even for the other half. So I ended up with very small profit on that play. But again, it knocked me all the way back to cash, and we saw another leg down, and I avoided that weakness and patiently waiting. So I'm not going to play EMH anymore because the bigger names provide more opportunity for me with liquidity, but still watching for the attempt of a higher low here at 251, compared to 244, and the bulls need to break 275 to shift this daily momentum and see a bounce get going. And the weekly chart obviously falling apart. The clear bear break was 369, and it was an all-out dump once that support level broke. So again, stop losses, losing daily and weekly uptrends would knock you back into cash and have you able to buy these discounts. I mean, the trend is your friend, and when we break clear trend levels, we get significant follow-through to the downside, which is what's been happening over the past couple weeks. TLRY is an IPO. If you are newer to trader, and if you are newer to trading, do not trade IPOs. Watch them, learn from them, paper trade them, practice with them, but they are as high risk as you can get. And this one was all over the place, huge gains to the upside, and it actually faked me out a little bit on the first trading day. So I've made some nice profit on TLRY this past week. I've been flipping it based on the 2-minute time frame with significant positions and just scalping, a 10, 20% or a 10, 20 cent scalp is worth it for me. So that's what I've been doing. Day number 1, I did that when we hit the bottom and we changed the 2-minute time frame. So as soon as we hit the low and then the 2-minute trend changed, I started scalping, and every time we got a bull break, I would buy the bull break, and then I would just instantly start scaling out into that initial strength. Then I was looking to swing the position overnight. We were closing really strong. The bulls looked really good, and I thought, all right, with this kind of strength, we can easily see a gap up open to new all-time highs and see a lot of follow-through. This threw me off, this selling pressure. This was very unusual. It was a complete turnaround. We had multiple tops. We topped out at 24. Essentially, it was a quadruple top. So I stopped out of my position. I was planning on swinging a very large position for me overnight to get that gap up, and I was looking for, a multiple month maker on this play. I stopped out on my last trade attempt at break even after an entry, and then the next day we saw a gap up open and follow through. So essentially the plan that I was looking for played out perfectly. It was just this action that threw me off. And looking back in hindsight, had I held my position through this pullback, I would have given back very significant capital, and it would have been way more risk than I wanted to take on. So in hindsight, I would not change anything about my stop loss level, but I would have I did continue to play it a little bit more on Friday as well. Same strategy. We get a new all-time high bull break, I make an entry, and then I just scale out into strength to stay protective and continue locking in my gains. But we saw a huge follow-through, and we saw the kind of follow-through when you look at this hourly time frame. This looks like ETFs buying. So when you have a situation where shares are limited, it's a recent IPO. I think they might have only had 5 or 7 million shares, but there is clearly more demand for these shares than there are supply, which is why we're seeing these huge gains. And the more ETFs get involved, the more that scale of supply outweighing demand, or other way around, demand outweighing supply, the more that kicks into gear. So T-God is the comparison. Look at the daily chart for T-God, IPO, and then this is the ETFs buying. And we're going to make note here, the ETFs didn't really start buying until a few weeks in after initial consolidation. There is no consolidation at this point, and we have not seen the ETFs holdings, at least MJ, I believe, have not seen an update to have TLRY in it. So we know there's still some ETFs with no exposure to this name, and I'm going to be watching if on the first healthy consolidation, maybe a couple weeks into trading, a week or two, if those ETFs start buying and we see another push up. But with this big move right now, again, my strategy is there's people that are buying and holding, and at this point you could easily set a break-even stop loss and stay protective, and they're making bank. But my strategy with larger positions is going to be to continue to scalp into strength and remain protective, because I do not want to be holding the bag when we end up pulling back. T-God, from the high to the low, pulled back about 40% over 5 days. So no chance I want to either get stuck in an entry that gets subject to that pullback or give back that much upside, if I were in a position and wanting to walk up a stop loss. But the bottom line is, I know there's another trade opportunity coming, not only to the potential upside if we continue to start this week, next week, but once the top is hit, I'm going to be looking for the initial bounce, because just like T-God, the initial bounce, once the daily higher low was established, we went from 590 up to 726. So that bounce was over 20%. And I would expect TLRY to pull back, 30% from its top, wherever that ends up being, and then seeing a 10% bounce. Those are some potential numbers to be, very rough numbers, but that's what I'm going to be looking for on TLRY. So I could look at this and say, all right, it's too volatile for me right now. It's running too hard. It's too extended. I don't like the risk to reward, but I'm going to keep an eye on this name, because when I know that when that initial consolidation starts, we will form a higher low on the daily time frame. Bulls will buy the dip, and we will see a short-term bounce that has some really nice profit behind it. So that's one that I could just stick on the back burner and check in couple times every day and see when that opportunity does arise. And you don't even have to check in every day, because once the top is hit and we do start to pull back, that's when you start to pay close attention, and we'll cover that a little bit more once that starts to play out. So T-God, might as well cover it. I was using it for an example of the, and actually let's go to TLRY and get some levels. 15-minute support established at $27.79, another support at $29, and after hours, the bulls can easily push up the price after hours on very, very low volume. There is nothing on the bid and the ask. So that's what we saw, where, you know, we closed Thursday down in the low 22s, and we opened Friday in the mid to upper 23s. And that's just because a small amount of volume can push the price up. So if I've got 100,000 shares here and I'm in big time, I'm going to use, 5,000 shares has a significant impact pre-market. So bulls can essentially prop up their positions a little bit and keep that momentum going. T-God on the daily, very clear downtrend, and it'll be very clear when it does break. Bulls have to break 606 at this point, just marking the clear lower highs on the daily time frame. These are the three most recent ones, and we have our low of support of 543. The bulls are trying to pull off a higher low at 561, and now we need the break of 606 to change this momentum and give us a weekly higher low. So we're looking for a weekly equilibrium to form, our high, low of the pullback, and then we'll look for a lower high to form on this bounce. So at first we were looking for a daily equilibrium. We got it. It tightened up real tight. We got a bear break. So now we're looking for the weekly equilibrium, and the change in the daily trend will make us confident that our weekly higher low has been set. The 4-hour time frame, there's our low, high of the bounce, higher low, trying to change that 4-hour trend and shift that momentum back to the bulls. And just a rough target, let's say our higher low was in and the bulls do change the momentum to start this coming week. Let's see, 543. I'd be looking for a conservative target here of about 640 for a bounce on a lower high. Obviously, the entire sector's action is going to be affecting what's going on here on this bounce, but the timing is right because we know these major names are going to bounce sooner rather than later, very likely early this coming week, and that can only help these bulls change this daily trend and try and see some upside. So potential stops, if I wanted to get in, if I was higher risk, higher reward, I'd be getting in right now and have my stop at either 561, just below it, or 543. If I'm more conservative and more patient, I'm waiting for the change in the daily trend to make a position and make an entry. So that's where we stand. That's probably the longest MJ video that I have made in a long time. Again, my focus is all on WEED and CGC. If you give me a 3% drop first thing Monday, I'm going to be aggressively buying that dip, and I'm going to be looking to make 5 to 10% on this bounce and have a party. So thanks for tuning in. Feel free to make any comments. Have a good day.